Good morning, options trader. Steve Gans here. And yeah, I still got the funky glasses, but I've been able to lighten them up a little bit. I used to have to wear these really dark red ones, and now I can go a little shade lighter. So anyhow, I want to share a concept trade with you. This is a paper trade. This is something to help people experiment and understand how different things move. In this particular case, I am going to look at an earnings trade. And this is an earnings trade around Cisco. So Cisco has earnings tonight. And what this trade is, it's a little bit different. It's a diagonal call spread. So a diagonal is basically where I'm selling short a front month strike or a front period strike. In this case, it's weeks. And I'm going to be buying the longer strike. And it's a diagonal because those are not the same strikes. If they were the same strikes, this would be a calendar. So I want you to think like a vertical spread concept, where I basically am just selling a call vertical, but one of those is going to be a little further dated in time. Now, why do we do this? One of the cool things in OptionStrat is that most software programs have a volatility button that moves together. So in other words, when you move the volatility button, it's sliding the volatility on both options at the same time. When those options are at different dated expirations, they move differently. So this is the piece that I want people to recognize and study. So we can see right here that the August 15th, the earlier expiration, has an 80% volatility, while the August 22nd, a week later, has a 43% volatility. So the theory in this trade is that once earnings are announced, the volatility in the August 15th is going to drop out significantly faster. So if that occurs the way that I'm expecting, we're going to get something like this. Now, of course, that back period is also going to drop. I just don't think it's going to drop as much. So that's what this is all about, is paying attention to these and seeing how these different strikes move. So I'm going to go ahead. I'm going to save this trade. I will call it earnings, and I will share this in the comment section below so that everybody can load this up in their platform and take a look. And you do not need to be a subscriber. If you click on that link, it will open to you just like it opens right here, right now. And then I want you to watch this, if possible, on the open tomorrow and see how this changes. Again, it's simply a learning experience, but the nice thing I like about this, relatively small loss, and the chance of profit is 86%. The one thing you have to remember is do not let your short expire, leaving only this long, because then you will be exposed to whatever's left in that long as far as it decays. So this max loss figure right here is assuming that both legs of the trade are closed this Friday when the shorter one expires. So that's it. It's going to be a unique experience if you've never traded time spreads before. So model this up and check it out.